thank you so much for joining. And before I turn this over, I do want to point out that we are taking audience questions throughout today's discussion. Please type in questions using the Q&A section at the bottom of your screen or top of your screen, depending on where it falls on your computer. Type in questions and we will get to those at the conclusion of today's discussion. So I would now like to turn this over to Stephen Saltzstein, Force Family Office's CEO.
Thank you, Callie, and thank you everyone for joining today. We greatly appreciate you taking time out of your day to be with us. We have a fantastic symposium for you about precious metals recycling, recycling computers and motherboards, et cetera, to get the metals out of that. And, you know, it's just such an exciting space in the sense that on a per tonnage basis, you get a much higher amount of precious metals doing what Basil is doing at his company than you do just regular mining. And plus, obviously, it's good for the world. It's ESG. So to begin with, though, I wanted to give our audience, our family offices, just kind of a global macro picture of what's going on in mining. So I've asked our great friend, Jim McVeigh from Syndex, which in my opinion is, you know, the world's greatest database of private companies, and that's not an exaggeration, to come in and just give us a tutorial on, hey, what's going on in the world of mining, mining services, et cetera, right now. Jim?
Do you want to share the slides, Stephen?
I thought you were going to.
Ah, I'm happy to. I'm happy to.
All right, fine.
Okay, can everyone see this?
Perfect. Yes, sir.
Great. Okay. So to begin with, when you look at base metal mining, you can see that there's been, over the last year or so, there's been a pretty consistent uptick in terms of the amount of capital invested into it. The market overall, when you look at it on an annual basis, tends to be a little cyclical, and that's not surprising. When you look at the actual securities that people are investing into, you can see that it's a lot of private shares, private equity, so private families coming in, and venture rounds. So much earlier phase investing into it.
Jim, can I ask you a question about the private shares?
Of course.
Which is, so it's funny, when I first saw that private shares piece of the donut there, I thought, oh, I was thinking that's actually public companies doing a direct investment, doing a direct pipe or something like that, selling shares. So I guess my question is that both public and private companies selling equity essentially?
It's more the just buying shares from the individuals in the market.
It's more like secondary sales of
secondary
people that
sales.
Gotcha. Okay,
Yep.
great. Thank you.
So people buying into the private companies that are there.
Gotcha.
Yep.
Okay.
Because we focused on what are the private investments that are taking place as opposed to public securities.
Super.
And then in terms of metal processing and recycling, again, you can see when you look at it on an annual basis, you know, about 175 to 200 billion is an annual amount that's invested into it. You saw a pretty dramatic impact or increase in the fourth quarter of 2022 and then first quarter again. That's just individual deals that are happening. So you can see, again, here it tends to be a little bit later stage. So more of the Series A and Series B that are driving this part of it, not surprisingly, because more, you know, the established companies. When you look at who's been the active investors from both a family and from a fund perspective, you can see, you know, some very well-known names within the list that is investing in here, both on like Macquarie on the investment banking side, and then Sumitomo and Mass Mutual. So some pretty major players in the mining space. And then also there's been a lot of activity on the M&A side, and you can see some robust names here. So again, a lot of activity in and around this space.
Excellent. Okay.
Okay.
Thank you so much for that around the world. And, you know, once again, you know, this is just scratching the surface in regards to Syndex's capabilities. You know, they have one slide, which I think is fascinating, that they could produce for every sector, every subsector around which companies are most likely to raise money next. You know, it's as close to a crystal ball in the industry as you're going to get. So I really appreciate you providing that information. And okay, why don't we let Jeff and Basil take it away from here. Callie, do you want to go through Jeff's bio quickly?
Yes, it's just, yes, I do. Okay, so we are really excited to have the next two panelists with us. Jeffery Christian is the founder of CPM Group, a research consulting and asset management firm that is unsurpassed in research and analysis in gold, silver, and platinum group metals. And he'll tell you a little bit more about himself and his firm. And we also have with us today Basil Botha, founder and principal of Greentech Metals, a leader in e-waste precious metals recovery and recycling. And he too will tell a little bit more about Greentech Metals. So Jeffery and Basil, take it away. The floor is yours.
Okay, I guess I should start. Jeffery Christian. I started following metals and energy markets, commodity markets in general, in the 1970s. Actually started doing some work in the universities when I was still in university about it, and started off as a journalist following these markets, and then went to J. Aron, which was an independent trading company, one of the 12 largest precious metals trading companies at the time. And J. Aron was unique in that it had a fundamental research group. And one of the interesting things about commodities is they're grossly underreported, and there's a tremendous amount of secrecy. People know that that's the case with gold and silver and platinum group metals, but it's really, in fact, pretty much true across commodities. So there's a big value. These are highly asymmetrical markets. There's a great value that can accrue to somebody, an investor or other, if they have a superior flow of information as to what supply and demand actually are. I went to Aron merged into Goldman Sachs. In 1986, I spun off what was the commodities research group that I was running at J. Aron Goldman Sachs and set up CPM Group. So for 37 years, we have been an independent commodities research consulting company. We start with basic data gathering and coming up with estimates for supply and demand. My team at J. Aron put together the first estimates for gold secondary recovery from scrap. We've also done similar work on silver and platinum group metals and other metals too. We do a lot of work beyond that, beyond the precious metals across commodities, including metals like cobalt and high purity manganese and high purity nickel sulfate that are being used in electric vehicle batteries. But we'll talk more about the secondary supply of precious metals in a second. I'll let Basil introduce himself and Greentech first.
Thank you, Jeffery. Basil Botha. I've been in the mining space since the 70s. I won't say anything more than that, but I've worked in all corners of the world, and both in mining and exploration. And having come off a mining project in Finland in 2019, our focus was turned to electronic waste recycling. And we looked at this with a great amount of interest. And as a result of that, we've spent a lot of time doing research development, market research, etc. And the difference between the two is they're both mining essentially, but one is mining electronic waste, the other is digging actually holes in the ground. But the comparatives between the two are similar, but vastly different in another context. But I'm sure between Jeffery and I will go through the merits of electronic waste recycling and the encouragement that we've had as a result of all the work that we've done in this space.
There's a little bit of a note here. Okay, so yeah, let's probably start by talking a little bit about electronic waste and the industry and its size and its scope. There are many people, I mean, recycling and environmentalism have become much more public and broadly commented on sectors of the economy and society in recent years, in the last decade or two. But the reality is that precious metals and other metals have always been recycled from scrap, and scrap business has been something that's very important. In the precious metals market in particular, you have very valuable metals that are contained in electronic goods and in jewelry and other factors. I think the estimates are that there's somewhere between 55 and 58 million metric tons per year of metal scrap that is now recycled. And there's another 45 million tons that are not recycled, that is going into scrap heaps that ostensibly is feed for Greentech and other companies in this sector. One of the misperceptions that I want to bring out is that this is a new thing, electronic recycling and recycling precious metals from scrap. It isn't. I mean, it's been around as long as Basil and I have been in the business, and it actually exists before that. We have clients and friends, you know, one of my friends and clients of many decades, his grandfather started a company collecting precious metal scrap from jewelry and other companies that were generating scrap. And at the time, gold prices were set at $35 an ounce. Actually, when his grandfather was doing it, it was probably $22 an ounce. And silver was kept below $1 an ounce because by the U.S. Treasury buying and selling silver, because at $1 an ounce, the dollar value of the silver in coinage became such that the coinage would all disappear. The melt value was actually $1.29, but you had it. So his grandfather and his father struggled as scrap dealers collecting these metals and recycling it. And my friend took over the family business, third generation of recycler, in the late 60s, early 70s, when he got out of college, at which time the U.S. Treasury was floating the gold price, and it went from $35 to $42 to $68 to $200, and today it's $1,978. And the silver price went from less than $1, 80 cents an ounce, to $5. And Matt became a very wealthy person by virtue of this, because at that time, companies that had electronic scrap and old jewelry scrap paid scrappies to take the metal. They didn't see the value of their material. This was waste, and they paid someone to take away the waste.
Right.
Things have changed dramatically since that time, and most people and most corporations are now very much aware of it. So that's changed the dynamics. But the reality is that precious metals have always been precious, and they've always been recovered from scrap. So this is a well-established industry, well-established, you know, and the technologies and the processes and the flow of metal through the recycling business is well-established. But even so, as I said earlier, 45% of the metal being scrapped each year is not being recycled yet. So there's a tremendous growth opportunity just with the existing feed that comes into the market every year. Basil, you want to add to that or correct me?
Jeffrey, having spent inordinate amount of time in the mining business, my eyes were opened in early 2020 when I looked at electronic waste recycling. The light went off as such. And, one looks to see where the catch is, and, the numbers that you allude to out there in terms of, what is recycled, what is not recycled. The human individual on the planet today generates roughly 7 kilograms of electronic waste per annum. And I mean, it's set to grow by 2%. By 2030, it's going to be 70 billion tons of metal of scrap e-waste coming to the market. So the opportunity, I mean, from our point of view, the opportunity when you look at digging holes in the ground, where you're dealing with, say, 1.5 grams per ton of gold per ton of rock, let alone all the tons of rock you have to get that ton of rock to send to the mill. With electronic waste, it's 50 to 100 times that much precious metal in electronic waste. So, from our perspective, it's basically a no-brainer, but let alone anything in life, mining's not easy. Electronic recycling is not easy either, but it's a hell of a lot more easy to recycle electronic waste rather than, digging holes in the ground. And it's a lot quicker, no geopolitical risk, no country risk. I mean, in mining, and, you're stuck out in the boondocks with power issues, road issues. I mean, the list goes on and on and on. So, I mean, yeah, as I said earlier on, the light went off in terms of recycling electronic waste.
Yeah, and it's not just the greater content of precious metals in the electronic weight by weight, but it's also the value and the fact that you have, as you said, you don't have geologic risks, you don't have a lot of other risks, and you don't have enormous capital that you're tying up. And I want to explore all of these issues with you as we go forward. Just to put a background on it, we talked in tons. CPM Group's estimate is that there's about 220 million ounces of silver that's recycled from old scrap. This is end-of-life material as opposed to processed scrap generated by the manufacturer of goods using precious metals per year now, and about 34 million ounces this year in gold scrap. Now, a lot of that's jewelry, but a lot of it, at least 10 to 20% is electronic scrap, it seems. So it's an enormous market for Greentech to tap into.
Absolutely. I mean, just by comparison, I mean, if you take a mining operation, it's going to take you 10 to 12 years before you get into production. And you mentioned CapEx. I mean, the project in Finland was north of 200 million. To get in and produce up to 80,000 ounce gold equivalent, we're looking at about $3 million CapEx, and the time frame to get there is probably less than 8 months. So it's a compelling business, but I mean, there's also pitfalls. I mean, the electronic scrap is just not, floating around the streets waiting for you to pick it up. I mean, you've got to have expertise in terms of collection, shipping, and being able to get it to your facility. So from that point of view, we're fortunate that we've got an industry professional that is our procurement person to be able to get that material to our facility. So, again, compelling data that you've put out there. Which is really what we're looking to achieve by putting this facility into production.
Right. Let's start with the physical process. And as you were saying, you have a much faster, cleaner process to recover metal from existing scrap than from mining. And one of the issues that we've made at CPM Group is that if you look at electric vehicles, they're not as environmentally great as a lot of people would have them be, partly because part of what you're doing is you're moving the location of the generation of carbon dioxide from the vehicle to wherever the electricity is generated. Now, long term, you can find non-carbon dioxide producing electricity generating capacity, hydroelectric and things like that. But another issue is the amount of carbon dioxide that is used in mining lithium. And you guys you guys completely obviate the mining issues, not just the costs and the time to market and the geologic and political risks, but also the environmental negativity that comes with mining. You just take all of that off the table and you go right to the point where you have feed for your processing plants.
Right. Again, when we looked at this recycling business, we looked around the world, and a lot of the large recyclers of electronic waste, in simple terms, burn the material and recover the metal thereafter. We didn't actually want to do that from an environmental standpoint. So it was fairly complex for us to, try and figure out exactly how we were going to take this material, push it through the system, get it to the end, and then be able to separate all the metals out. So we spent about close to 3 years and a significant amount of money and applying our mining expertise of the way we were going to actually process this metal. So initially, we thought of many, many different ways, but finally figured out that, shredding, high-speed grinding, first, secondary, third, and then going to a dry separation table, spit out the plastic from one side, take the metal from the other side, and then process it thereafter. So it's a way more efficient and environmentally friendly way to process it from a mechanical standpoint rather than a pyrolysis standpoint, which a lot of the big recyclers are doing, simply because they can push through more tonnage. But at the end of the day, our process is easily scalable. As I mentioned earlier on, within 8 months, we can be in production. Some of these big smelters that they're putting up that take 3 to 5 years to build, let alone the CO2 that they're going to emit. So from a mining standpoint, we didn't want to go that route. We've stuck with our mechanical separation technology, which we've tested. It works well, and the recoveries are excellent. So we've gone that route rather.
Mm-hmm. Let's. There's so many issues here to cover. And in my mind, the last one that I wanted to talk about were regulations, but maybe we just talk a little bit about them at first. But I really want to focus on is your physical plans and plant and such. But, the regulations have kicked in several ways. One is that worldwide, we're seeing more and more governments regulate the end of life electronics. As you were saying, people generate enormous amounts of electronic scrap, as well as other scrap too. And one of the things that we're seeing around the world is governments saying at the end of the useful life of those components, they must be recycled. And, I live in Brooklyn, in New York City, and we have recycling days here several times a year. And you can go there and there is a line of dozens, if not hundreds of cars full of electronic scrap waiting to be offloaded into tractor trailers to go to recycling places almost immediately. Another set of regulations that we have to talk about and be cognizant of are the regulations on the factories that recover the material. And you touched on it a little bit. Traditionally, a lot of the stuff went to pyrometallurgical smelters where they just burnt off the plastic and it went up the chutes. Maybe they had bag houses to collect some of the more atrocious things that would be burnt off. You guys are focusing on grinding and shredding, and I assume that you have a hydrometallurgical process then that you apply after that. Walk us through what your plans are in terms of, you bring the material in. How do you bring the material in? And what are the steps between the time it comes in on the loading dock and goes out to a refinery for final refining?
Yeah, all good points, Jeffrey, and the material will come in various ways, but let's, for this purpose, say that it comes in by container. When it comes in, it's given a batch. You know, we batch that particular material. It comes from a particular supplier, scrap supplier. It's fed through, as I mentioned earlier on, it's shredded. It's ground down by various processes to get it to the particular size that we want. And then it's put over what we term as a gravity table, where the metal is taken off on one end and the plastic is taken off on the other end. From there, we take the concentrate, for simplicity terms, and we put it through hydro metallurgical process. We take out the gold, silver, or the first step, palladium, gold, silver. If there's some platinum, we'll take that out as well. Copper is taken out in the process as well. And then probably the tin. So there's 5 primary metals that we take out, but during the process, and I should back up a bit, the aluminum and steel is taken out pre the gravity separation. And then once we've gone through our hydro process, there's a sludge left over, which at this particular time we cannot deal with. We don't have the technology. We will on-sell that to a smelter. We will separate doré, as it were. We'll take out the gold, silver, palladium, if there's platinum. And then the doré we will send off to a refiner until such time as we get to the stage where we can actually refine it ourselves to 999, which we will get to through a chemical process.
Yeah. And what's the timing of processing a batch of scrap?
We'll do 1.22 metric tons per hour on one line. We can add lines, as much material as we get, we can add lines to deal with it as material comes in. So 1.22 tons per hour, roughly, round numbers, call it 24 tons per day. Over a year, that's about 8,400 odd tons per year. Small in comparison, but that will produce around 80,000 gold equivalent ounces per annum.
Not bad. At a cost of?
At a cost of all-in sustaining costs of in the order of about $1,000 per gold equivalent ounce, which is in the ballpark of mining, if not certainly a little less expensive than mining. And for example, and again, in Finland, 80,000 ounce gold producer, 1,200 people worked on that mine. In this particular instance of 80,000 ounce production, you have around about 25 people.
Yeah, you're selling yourself short here. The all-in sustaining cost on average for mining gold right now is about $1,400 or $1,500 an ounce. So you're operating at about a 30% profit compared to what they are in terms of it. And
way less moving parts, as you would know as well as I know. On a mine, you've got a lot of moving parts. In this particular instance, relatively small moving parts. I mean, the big cost is cost of material. Scrap dealers know what it costs. They're not going to give it away because, they're in the business to produce scrap, sell scrap. And we take that scrap off their hands.
Right. Now, my understanding is that Greentech has letters of intent from suppliers of scrap already lined up so that when you're ready to go, the scrap will be there.
Absolutely. I mean, we've got letters of intent from 500 to 2,000 tons per month. As as you alluded to earlier on, I mean, the material is abundant out there. And you touched on a really good point about recycling, whereby I know in my cupboard, I've got a computer or two computers. I don't have any cell phones there, but I have two computers which need to go to the recycling. But that's where a lot of this material sits, in people's houses, in company offices. A lot of the material that's not recycled. So, I mean, even the community I live in, twice a year, we have scrap recycling. And like you say, there's cars of people bringing old scrapped or old material to be recycled. So the onus really at the end of the day is on the manufacturers to have some sort of collection and you know, impose, I don't want to put in penalties, but have some sort of incentive for people to take scrap or old used electronic equipment back to be recycled.
I know in the EU, they have regulations that say, you know, if you're a producer of electronics, you're responsible for taking them back and having them recycled at the end of life. I know that certain jurisdictions in the United States have tried that or tried to create such things, but it hasn't worked quite as well. But I also know that there are any number of companies like Apple and Dell where you can send your old computers back to them. It's probably a least efficient way to get it recycled. You know, and Staples now has a bin at the front door of its stores where you can just put stuff in, as does Lowe's. How much of your feed is going to be what we call old scrap, which is end of life? You know, it's radios and TVs and computers and cell phones and everything else that people just don't use or don't want anymore. And how much of it's going to be what we call new scrap or process scrap, which is, you know, when you're manufacturing electronics, you might generate, you know, you might take in 1,000 ounces a week for use in your products. And of that 1,000 ounces, maybe anywhere from 50 to 80 ounces of it, or 500 to 800 ounces of it, 50 to 80%, is processed scrap. It doesn't go into the end product. It gets refined, recast, and then reused. Do you have an idea of the proportion of new scrap versus old scrap that you'll be using?
Right now, we would be taking printed circuit boards that have been separated out of computers, cell phones, dishwashers, list goes on and on. That is our primary feedstock at this stage. Once we get to the stage where we consistently producing metal and we want to expand our operations and we've got something to show, the original equipment manufacturers, Dell, Apple, you know, the list goes on and on and on, we will then approach these companies to send us their scrap material from their manufacturing processes. So there's two ways of looking at it. Original equipment manufacturers, where they send their scrap to certain recycling companies. But initially, as I mentioned, printed circuit boards, we look at that as sort of the low-hanging fruit to get our operations up and running. And because of the abundance of it, but once we are, again, you know, there's certification process in this business as well. You can't just operate. There's R2, what they term as R2 certification. Europe, they have certain certification mandates. And then, you know, to build the trust, as it were, with the big OEMs, original equipment manufacturers.
Right. You anticipate that once you're fully developed as an operation, you will be selling precious metals directly to precious metals using companies, electronics companies, jewelers, and others?
Yes, down the road, that would be the aim, to produce fine gold, silver, palladium, and then sell it to original equipment manufacturers at a premium. And as you probably know, Jeffrey, there's a premium on silver, quite a large premium on silver, as well as not that big a premium on gold. But this would benefit Greentech Metals to a great deal, rather than send all our metals to be refined and then sold into the market. So the original equipment manufacturers, and Apple's already said it, they want to be fully sustainable in recycled materials by whatever year it is, 2035 or somewhere around there. And so it's that whole sustainability that these companies are looking at, so that they can come out and say, all our products have used recycled, repurposed metals in our equipment.
Yeah, it's responsible sourcing, I think is the term that they use.
Right.
And we've seen this. I know about 15 years ago, I was doing a lot of work in China, and one of the larger US computer companies had a problem because its Chinese component manufacturers were certifying that the gold and silver in their components was responsibly sourced. And spectrographically, someone pointed out that some of the gold was coming from North Korea. And it was a gigantic scandal that rippled through the Chinese electronics component manufacturers all the way to this US major computer manufacturer. So it's a really big issue. And if you, so the electronics manufacturers will put, as you said, a premium on being able to say, this is manufactured from 100% recycled material.
Right. Yeah, and right now they, as I pointed out, they're already paying a premium. So if they want to buy silver, they're probably paying a 12-13% premium on the silver anyway. I mean, I bought silver personally, I'm paying a premium on it. If you buy gold, you're going to pay a 3 or 5% premium, depending where you buy it. So maybe the premiums could be slightly higher. We don't know at this stage, but I'm certain there would be some compelling reason for sort of Apple to pay a little bit more.
Mm-hmm. All right, excellent. So going back to the process a little bit more, you'll be doing hydrometallurgy there. I am assuming that your plant is going to have a closed circuit for the liquids?
Yeah, the big factor with us, as I mentioned earlier on, is there's no emission, absolutely no emission. It's a mechanical process. Even the dust is collected and recycled as well in bag houses. It's a very clean process. There's absolutely no discharge. The electrowinning for the copper will be a closed circuit. The hydrometallurgical system will be a closed circuit as well. Absolutely no discharge. And, we haven't even spoken about carbon credits in our whole model, simply because, if we produce responsible metal from recycling, some of the big smelters out there will have to buy carbon credits, and we could generate carbon credits to sell to them in their process as well. So absolutely, and that was one of our key areas of coming up with this process, is we didn't want to deal with environmental hazardous waste at all.
Mm-hmm. They're going to, I'm pretty sure that Stephen's going to try to get us to take some questions from the audience soon. So before we wrap up, I have a whole list of topics that I could ask you about, but are there other things that you would have had me talk about or ask you about? Are there issues you want to bring up before we open it up for questions from the audience?
Jeffrey, based on your experience in this business, which probably goes back as far as mine does, yet two different experiences that we've had, I believe that you've really touched on most aspects of this business. But if I can just go over this one more time, I mean, the recycling business is certainly very compelling from a responsible aspect as well as environmental aspect. The speed to market is really, really compelling. The capex is low. The profitability is certainly there. And the supply of material is not a diminishing supply like the mining business is, but a growing supply. And as technology speeds ahead, so electronic waste is going to become more and more abundant.
That's absolutely true. And as you were saying, yeah, we talked about a bunch of topics, and I think that from my perspective, it's been relatively superficial, but there are all kinds of really key issues that are strategic advantages to recycling metal as opposed to mining. And one of the issues is your technology, it exists. It's been used for years. It's proven. There's nothing novel here. The way you put it together may be somewhat novel, but it's there. There are probably multiple sources that you can buy the equipment from. So there's a competitive market for the things that you need to buy, the plant and equipment. And it's also very scalable. If I think I've summarized that accurately.
Yeah, and you touch on, sorry, one more point is, the technology that we've settled on. There's no black box. This is not a black box. This is not the new mousetrap by any stretch of the imagination. It's know-how of how to process these metals based on 40-odd years of mining experience. So this is, it's not a genie in the bottle thing here. It's this equipment exists across the board.
Right.
We just pieced it together.
Yeah, it's proven, it's testable, it's reviewable. If you are going to a company, it could be a supplier of scrap, it could be a buyer of refined metal, it could be an investor in your company, and they know anything about the scrap industry, they can readily see that there's, as you said, there's no black box. There's no technological uncertainty here. This is stuff that is done daily around the world, from Mumbai to China to South Africa, and throughout Europe and Asia and the United States and Canada. I mean, it's an established system,
right,
that you're plugging into.
Absolutely. Yes. The short answer, yes.
Okay. Kali,
several
questions?
Absolutely. Several questions have come in. So some of which I've been answering offline. And we will take some of those offline. But let's start with Basil. How much tonnage of e-waste is there in the world?
Statistics from 2019 indicate there's about 54 million tons of electronic waste produced annually, set to grow at 2% per annum. And by estimates of 2030, there should be about 70 million tons of electronic waste being generated. And as I mentioned in our earlier on in the interview, about 7 kilograms per person worldwide is generated per annum.
If I could just elaborate, yes, 57 million metric tons a year of e-waste that's actually collected. There are other estimates that there's another 44 million metric tons a year that are not collected. So there's this gigantic reservoir that can be tapped into, either by having economics drive consumers and others to do it, or by regulations where the governments say, hey, don't put your electronic waste in the garbage bin, put it in the blue bin and take it to the recycling center twice a year.
There are a few questions on precious metals, which we're going to get to in a moment, but there are a couple on the EV industry, and I just wanted to touch on those quickly. What are the most important metals to mine in the EV industry? And part two of that is, can you talk about the different metals needed for the car versus the metals for the infrastructure, charging, etc.? And just talk a little bit about that.
I think Jeffrey is very well qualified to answer that question.
Yeah, I wrote a book on electric vehicles in the 1970s and followed it ever since. There are different metals, and one of the issues facing it is what's the battery technology. You know, the battery technology most used now and most likely to be used for several years are what they call NMC lithium-ion batteries, and they have nickel sulfate, manganese sulfate, and cobalt sulfate, and then they have lithium, and they have graphite in them, in the batteries. In terms of the infrastructure and the vehicles themselves, you have a tremendous amount of copper. You also have more silver. You know, the average car that burns petroleum products, diesel or gasoline, has about an ounce of silver in it. And it's mostly electronics and screens and everything else. Electric vehicles will have 1.5 to 2 ounces. 2 ounces right now, but they're looking to reduce it. So it's silver. Now, in terms of criticality, there's a lot of copper out there, and it needs to, but we will need more copper. And as with electronic scrap, there's a tremendous amount of copper electronic scrap that could help reduce the perceived shortage or the projected shortages over the next 10 to 20 years. Copper's not such a scary thing. It's there, it just needs to be accessed. The silver is there, and it's not necessarily an issue. The lithium is an issue that people are worried about. And it's hard to say what's going to happen, because as you build out the electric vehicle industry, and also what they call the ESS, which is electricity storage systems, they'll be using lithium-ion batteries, and you'll get to such a point, and you're already getting there, where the battery manufacturers will start using recycled lithium, recovered from end-of-life lithium batteries. So there's a big debate about how many new lithium mines we'll need. Nickel, there's a lot of nickel out there, and it's mostly used in ferroalloys, stainless steel, and things like that. The nickel sulfate is the bottleneck, and this is very high purity nickel sulfate, and it's really a chemical industry issue or a chemical market issue rather than the metals industry. The second metal now is manganese sulfate, and again, tremendous amount of manganese that's mined around the world. 95% of it goes into ferroalloys, various types of steels, stainless steels. The amount used in batteries right now is less than 1%, and it's probably going to go up to about 5% as electric vehicles build out. But again, it's the high purity manganese sulfate. You have 90+% of that produced in China right now. There are issues with quality and purity. And there's one non-Chinese manufacturer of high purity manganese sulfate right now. There are a number of companies that are looking to build out high purity manganese sulfate factories. And again, it's a chemical industry issue. And then there's cobalt. If you go back 5-7 years ago, people were talking about, there are these mathematic things, 30% of the active cathode material would be high purity cobalt sulfate. And there was this big clamor to develop cobalt mines. And CPM Group was telling our clients, don't invest in those mines, because we will see the battery manufacturers pivot away from cobalt sulfate to manganese sulfate. And you've seen that. So you've gone from 30% cobalt sulfate to 10%, and it's going lower. And you've seen manganese sulfate go from 10% to 20% and pushing toward 30%. So there is a need again for cobalt and for cobalt sulfate. And with cobalt, it's not like nickel and manganese. There's not a lot of cobalt mined. And where it is mined, Democratic Republic of Congo. So there are a lot of ESG issues and a couple other places. So with cobalt, you have a cobalt supply issue, and then you also have the manufacturing of high purity cobalt sulfate issues. So it's across that spectrum.
Great. Can we talk a little bit about a snapshot of what's going to happen to the precious metals prices over the next few years and what is driving that? And then secondly, will consumers pay more for recycled gold and silver, due to the ESG impact value on that?
I don't know where the precious metals prices are going. I'm sure Jeffrey has a fair idea. But certainly to answer part of the question, I'll let Jeffrey answer the other question, is that original electronic manufacturers are committing themselves to use recycled material. And unfortunately for them, it will cost them more to go that route in order to be this ESG company that they alluding to. So I'll let Jeffrey talk about prices.
Yeah. It's not just electronic companies, jewelry manufacturers too. Yeah. And Tiffany, for one, has sourced its gold and silver from the Bingham Canyon mine in Utah for decades, so that it can assure people that it has ESG pure green gold and green silver. In terms of the prices, it's, I would say it's anybody's guess, and maybe we have a better track record than others at CPM Group. Our expectation, gold prices and silver prices are driven primarily by investment demand. And investment demand is in turn driven by economic and political and financial market instabilities and uncertainties and concerns. So when things are scary, people will want to have more of their wealth in gold and silver. They'll buy it and they'll bid the price up. We have seen since the year 2000 an upward shift in the investment demand curve for gold and silver. And that's economists speak for saying more people are buying more gold and silver in more parts of the world at higher prices for a longer period of time than ever before. And it's really been since 2000. And if you look at a history book, you can see why. We've just gone from crisis to crisis, politically, economically, and in terms of financial market stability, bank problems, the tech stock blow up in 2001, the great global financial crisis and Great Recession, 2007 to 2011, sovereign debt problems in 2010, 2011, and everything that we have now. And our expectation is that this period of heightened economic and political and financial uncertainty is going to continue and going to get worse, so that our expectation is that gold and silver prices are likely to see another wave of increased investment demand over the next 3 years. And that was likely to drive gold and silver prices really to record levels. And if you'll bear with me, I'll throw out a cute little tidbit that the debt ceiling agreement last week suspends the debt ceiling until January 1st, 2025. Think about January 1st, 2025. There's an election in November, which is going to be very hotly contested. The Congress will be a lame duck Congress. If you're a business and you say, we need to come up with a new budget, you're going to say, and we should do it by January 31st. You're not going to say January 1st. You're going to say January 31st. But this isn't a company. This is the government. The Congress will be lame duck, and the Congress tends to recess 2 or 3 weeks before the end of the year. They won't even be there to negotiate. And you've got a greater than 50% chance that you'll have a lame duck president too. So assuming that politicians are venal and not stupid, they've set the country and the global financial system up for a crisis in December 2024. Now, so when I say that we think that 2024 and 2025 are going to see heightened political, economic, and financial unrest, there are some really good concrete reasons that we can put forth to support that contention.
Yeah.
Unfortunately. Unless you're recycling gold and silver.
Yeah.
Okay, so we are coming to the close of our webinar. Basil, I'm going to turn it over to you for any final words before we close out. And before I do that, I just want to point out to the audience that everyone out there has my email address. I'm happy to facilitate an introduction. Some of you have already reached out about that, which I will do after this call. So again, Basil, back to you for any final words before we close out.
Yeah, thank you, Kelly. And again, thank you, Jeffrey, for your insights and experience, knowledge in the metals mining industry. It certainly goes back a long time, and a lot of the research that you've done certainly is excellent. But from our standpoint in Greentech Metals, it's a compelling business. It's business dealing with ESG, responsible mining of electronic waste, recirculating material that otherwise would probably disappear into the ether. And it's a highly scalable business, and it can be scaled very, very quickly in any part of the world which has an abundance of waste, let alone how you ship the waste to where the facility could be. So it's compelling from a pollution point of view, geological, geopolitical, speed to market, capex. It's got all the fundamentals of a business that is sustainable and can grow.
Okay, well, thank you everyone for joining us today. We really appreciate it. And again, reach out if you want any further dialogue or questions or introductions. And thank you, Jeffrey and Basil, for joining us. And everyone have a great day.